Good afternoon, everyone. Welcome to Payroll 101. During today's session, we're going to give you some insider information on what payroll does, and hopefully it will be able to provide you with some tips and tricks and what you need to do in order to make payroll successful. We will be covering time and labor, payroll administration, and third-party administration. Go ahead, Suzette. So first, I want to introduce the payroll team. I am Audrey Beck. I am the Central Payroll Bureau Chief. We have with us Suzette Porter, who is our Time and Labor Manager, and her staff that report to her are Nayeli Chavez and Karen Armijo. Sean Haynes is the Central Payroll Senior Manager, who is my Deputy Chief, and she is responsible for Margarita Fresquez and Joel Karate. And then Margaret Griego is our third-party administrative manager, and her staff are Teresa Gallegos and Eleanor Baca. So before we get started, if you have any questions, please type them into the chat box. We will answer as many as we can at the end of each session, and we will provide any Q&A follow-up that we cannot get to at the in today's session. So with the payroll forms, there are some questions that everybody needs to be aware of. First is, who do I send the payroll forms to? And those would be sent to the DFA Central Payroll Forms at state.nm.us mailbox. You can locate all of the payroll forms on the Central Payroll website, and that address is listed in the slide. And whenever there are any changes or corrections needed, the deadline for receiving the forms is Thursday at the close of the payroll cycle on the payroll end date, unless there is a holiday, in which case we will move that cutoff forward and you will be notified by an email from me if we are adjusting those dates. We will be adjusting all of the dates in the upcoming months for the holidays in November and December. So one of the things that everybody needs to be aware of is that payroll does not make the rules. Payroll is responsible for administering the rules. So the people that make the rules are actually the U.S. Department of Labor, the taxing agencies such as the Internal Revenue Service, the Social Security Administration, and State Taxation and Revenue Department. We also have to follow New Mexico statutes, any legislation that's passed by the New Mexico legislature, any governor initiatives that are put into place. We also have to follow any court rulings or mediations. And of course, the union agreements determine a lot of how payroll is handled. We also have to follow any approved policies and procedures that are in place from DFA, SPO, the legislative branch, or the judicial branch. Each of these branches have approved compensation plans that we have to follow. We also have to follow the accounting rules that are in place, such as GADSB, GAPS, and MAPS. And then there are the benefit rules that we have to follow that are administered through PARA, ERB, retiree health, workers' comp, and of course your benefit providers. We also have system limitations that are in place that we have to follow because we can't override any of the system limitations that are in place. So at this point, I'm going to turn it over to our time and labor team. So Ms. Suzette Porter is going to walk you through time and labor. She will show you what needs to happen during the time and labor section.
Thank you, Audrey. I am Suzette Porter, the Time and Labor Manager, and on my team, I have Karen Armijo. She's our Payroll Adjustment Administrator. She processes and reviews all the TLVs, refunds and deductions. And then also on our team, we have Nayeli Chavez, who's our Time and Labor Administrator. So she does all the time and labor issues, like issues with schedules, the timesheet, producing times, maintain time reporter data. And so today, we will be going over the primary functions of the time and labor team, areas of growth for both DFA and the agency, tips and tricks along the way, and any contacts and resources that are mentioned throughout the presentation will also be given in a slide. So my team works with all share administrators, including payroll administrators, any individual who's using share for payroll, including the CFOs throughout state government to ensure payroll processes are completed timely. The primary functions of the time and labor are processing TLVs, which are terminal leave requests. And we currently process anywhere between 130 to 300 TLVs per pay period. Currently, we have a relatively high number of rejections. So that is something that we'll go over in a few slides. At a minimum, the TLV packets need the TLV request form and the TLV report. Any prior fiscal year TLV requires the CFO signature, and any TLV that is submitted that has outstanding payable time, and that is time that is going to produce additional leave accruals or pay into para, any type of payable time like that will need to go through payroll first before we can process the TLV. And we'll go into details about that as well. Timesheets. So we send out friendly notifications and reminders about timesheet approvals. We process timesheets on behalf of the agencies if the agency is unable to enter and approve timesheet corrections because it is outside of their access. We also send friendly notifications and we provide assistance in clearing up exceptions, except the exception related to combo codes and BUD reference. Those specific exceptions go through Teresa Gallegos and Margaret for them to assist the agencies. We also process the refunds and deductions, and any refund that is for 5 or more pay periods require GST approval before we can process it. So you actually would send that to GST risk management and then they forward it to us. And those refunds and deductions can be due to qualifying events or new enrollments, which require the emails from ERISA. And we also process refunds for union dues. And that is specific to CWA because it's my understanding that AFSCME refunds are handled through a different process. So any union refund also requires the email from SPEL. So today my primary focus is going to be on TLVs because we do have a significant amount of TLVs that are submitted that have errors. And so I want to kind of go over the most common errors, how to identify those errors and how to fix those errors. And so this is the TLV request form. And I think one of the most important things is submitting the TLV packet on time. And so the sooner, the better. If you wait until the day before the day of the deadline, then we do have a significant amount. And if your packet has errors, we may not be able to process it during that payroll. So the instructions are on the actual form here in box 1, identifying what it is that you need to do. The most common errors that are submitted on this form are related to the pay group. So if you have a GovX employee and you identify that employee as being a classified employee, then when we create the TLV with a pay sheet of a classified employee, there is no employee in that pay group, so the paycheck will not be issued. Also, another issue is the rate of pay. So the agencies have to ensure that the rate of pay that they identify on the form is the employee's correct rate of pay. For transfers, one of the most common errors is that the prior agency information will be at the top, and that is incorrect. And there is a guidance document on how to do a transfer TLV, and it's a collaboration between the losing and gaining agency. So the gaining agency's information is going to go on the top. That's where the employee's current pay sheet is going to pull from their current agency. However, we will need the losing agency's financial information to charge the losing agency. So if you just provide the losing agency's information on the top, that doesn't give us what we need, and so the wrong agency can be charged. One really good agency practice as part of their exit interview process or exit process is to include informing employees of the dates that they are going to receive their last paycheck, and then also when they are going to receive their TLV payment, because we want to give that information with the employees at the beginning so that they can plan and prepare, because a lot of times employees think that they're going to get that TLV payment sooner than they are allowed to. So next we have our TLV report. And so this report is very important, but I don't believe that people understand why they are running it and what to look for on the report. There's a lot of information that is pulling from the job data as well as from the timesheet. And so this report is giving us all the information that we need to ensure that job data is correct and the timesheet is correct. And so this is a screenshot, and right off the bat, if something isn't showing up correctly on this report, it's an indication to the agency that they need to go back and fix something. So the first thing that we start off with to generate the report is the as of date. The correct as of date to use is going to be the same date as the termination. So we want to know if there's any reported time found after the termination date. So that's why this date is really important. If you put the wrong date and use an earlier date, it's going to pull the wrong information from job data. If you put a later date, then it's not going to give us the information that we're looking for in this bottom field. The payroll status, this information pulls from job data. So that's the termination. It's going to be the last entry on job data. So this is how we can determine that the retirement or the termination is entered in job data and the date. The earliest change date pulls from the timesheet, but this date should always be after the termination date. If this date is prior to the termination date, that's an indication that something needs to be corrected on the timesheet or that time admin has to run. The work group is changed to inactive using the same effective date as the termination date. All three dates should always match. And the time reporting status should always be left on active. Now, the last piece of the TLV process, after the TLV has been processed, then the agencies go back and they change the time reporting status to inactive. But if the agency enters this before the TLV is processed, it will not allow us to issue the paycheck. So again, before you make any additional changes to the TLV, make sure that it has already been processed before you change the time reporting status to inactive. Missing comp time. There should never be anything that shows up under missing comp time found. If there is, the agency needs to explain as to what happened and what needs to happen with that time that's showing up under this section. There should never be any unresolved exceptions. And there should always be payable time. This shows us that there has been time entered, approved, and processed through time admin on the timesheet. And this is what we will use to calculate the employee's paycheck. So if you don't have any payable time, or if you have information that's pulling up on these other three sections, your report or your TLV will be rejected because it's not showing correctly, or if you didn't provide an explanation for the missing comp time. Another thing that agencies have to do with this report is to verify the amounts that we are paying or that we are losing, because sometimes the employees' leave balances get out of sync, and it's common. So if you see that the employees' beginning balance is 17 hours, but we're paying out 20 hours, that's an indication that there's something wrong with the employees' leave balances that we need to look at, and we can correct it before we process the TLV so that we process the correct amount of leave. Also, all leave balances should be zeroed out. If there's any leave balances, this will be rejected. And that is with the exception of an overpayment TLV, which we'll cover in a second. A printing tip. So if you're having trouble printing this TLV report, sometimes we'll get them in with like the middle of the page cut off. We'll reject it because we actually need to see all this information that's on the side of the page too. So when printing to Adobe, there's a shrink to fit button that you can hit. It'll squeeze it all into a readable document that you can even print in vertical. Now we're going to go over some examples of some TLV reports that have errors. And so in this example, we have reported time after the termination date. So in this report, the as of date run used is 5/1 of 2022. The payroll status says 4/2/2022 active. So this means either the termination date is entered that is after 5/1, so maybe they used 5/3 or something, or the termination date is not entered in job data. However, this is a clear indication job data is wrong, so the agency needs to go back and check on that error. And the work group is entered effective 5/1, inactive, that's correct. And down here, we have reported time of 5/2. So there should never be any reported time after the termination date, which in this case there was. The termination date was 5/1, but they have time entered on 5/2. In this example, there's no payable time. Now, this is a very, very common type of error report that we receive. And I can tell just by looking at the balances, they had a beginning balance, they don't have a current balance, there's no payable time, but the earliest change date is 4/30. I can tell that the time has been entered on the timesheet, but it hasn't gone through time admin. So all the agency needs to do if they were to see this report is wait for time admin to run. After time admin runs, then they can rerun the report, and then the payable time will show up, and the earliest change date is going to change to a date that is after the termination date. Leave balances. So in this example, all the dates are correct, the earliest change date's correct, we have payable time, except there is an unresolved leave balance. So the agency needs to verify and confirm that all the leave balances are zeroed out prior to sending us those packets, or it'll be rejected. In this example, the time reporter status has been changed to inactive. So in this example, the correct date was used, but we have not processed the TLV yet. So because of this entry, we would not be able to process a TLV. Therefore, the agency has to go complete the maintain time reporter correction form that's on our website, submit that, have us remove that entry, and then they would have to rerun their report and then resubmit their packet. In this example, we have some incorrect effective dates. So the agency ran this report using the as of date of 5/10. The employee was terminated as of 4/3, and the work group was inactivated as of 5/9. The agency has control over the date they use to run the report, the as of date. If the termination date is incorrect, the agency needs to go through Do It to correct the termination date. If the work group effective date in time reporter data is incorrect, then DFA can correct that that entry on the agency's behalf once the agency submits the maintain time reporter correction form. So earlier I had talked about leave balances that aren't in sync. And so this is an example of that. So the agency had paid out the max $240 and lost the remaining balance, which they could see was $1035. And that is the recorded balance that they see on the leave tab on the timesheet. However, when they ran the report, there is actually a balance of 254. So 240 and 210 do not equal 254. So right there, you can see that the balances don't match and are out of sync. And if you click on view details here, it'll give you the balance. So when your balances don't match, give me or Nayeli a call and we can look into that to determine how to address that. In this example, we have pending payable time that is showing on the report. So we are not able to process a TLV for employees who have pending time that needs to come through. However, please note that time will not come through on a terminated employee. That's because once an employee is terminated, the system does not create a pay sheet. So if you run a report and you see that there's pending time, whether it be regular hours worked or leave taken, you need to remove the annual leave and the sick leave lost and submit a memo to DFA, and it can be addressed to Audrey Beck to pull time through. And the memo needs to include the employee's name, the employee ID, and the dates that need to come through, as well as an explanation of what happened. If you do not submit a memo to DFA to pull time through on a terminated employee, that time is not going to come through and it's going to just get rejected by payroll. After all payable time goes through payroll and the employee's leave balances have been updated, then the agency can submit a TLV. However, that's going to be in the following pay period from when all the payable time was processed. In this example, we have an overpaid TLV. Now, what is that? An overpaid TLV is an employee who got overpaid. I think the majority of the time it has to do with a holiday. Say the employee terminated on the 1st and there was a holiday on the 3rd, so they got the holiday. So in this example, the employee got paid some regular hours So got paid leave that they shouldn't have. And on the report, it shows as negative. And so what needs to happen is the sick and annual leave needs to be prorated for the overpaid hours, because when we process the overpaid hours, it's going to also adjust the leave balances. So if an employee got paid 8 hours of a holiday, they accrued sick and annual leave for that holiday that they worked. So when we reverse it and share, it's also going to take back those erroneous leave accruals. So you have to prorate the hours, you have to leave that time in the employee's balance so that when the system processes it, there's enough in there so the employee doesn't go into a negative. And next week, just have some quick statistics. So we currently review about, let me see here, 234 TLVs with 49 rejections, 18 submissions or resubmissions, and we only process about 167 TLVs per pay period. So that's a big difference between reviewing 234 and only reviewing 167. And so my goal is to bring down the number of rejections and the number of resubmissions so that we improve, both on our end, the amount of TLVs that we're processed or reviewing, and the amount of TLVs that the agency's submitting. And so we are going to assist the requester and the reviewer, and we're going to teach you how to use the tools, how to read the reports, how to prorate the leave, how to do all those necessary things in Share so that you can process a correct TLV. We want to inform the requester of why they're running that report, what to look at on that report to identify issues prior to giving it to their reviewer, and so that the reviewer actually knows what they're reviewing. We want to inform the reviewer, this is what they need to be looking at. This is how to identify an error so that the reviewer is double checking the requester's work, because the reviewer is doing much more than just signing off saying, yes, process this TLV. The reviewer saying, yes, this TLV is correct and ready to be processed. So DFA is not the double check system for the agency, the reviewer is. So the requester puts it together, the reviewer double checks the requester's work, and that will reduce the amount of rejections that DFA has to do. And it gives both the requester and the reviewer a better chance at resolving the issues prior to submitting what's supposed to be completed work to DFA. And that means there'll be less frustration from the agencies when we have to reject and correct packets, especially when they're submitted late in the game, or even if they're not submitted late in the game, but we didn't catch the error until late in the game. We just want to make sure everybody has sufficient time to do their part. Next, we have timesheets. So everybody knows how timesheets work, or for the majority, people should know how timesheets work and the TRC codes and time admin. And if you don't, please reach out to me or Nayeli, and we are more than willing to do some one-on-one training with A staff or staff. But did you know, so DFA's model of accounting practices issued by the Financial Control Division is created because said division is required to maintain a central system of state accounts and to devise, formulate, approve, control, and set standards for accounting methods and procedures of all state agencies of the state of New Mexico, which includes a section on time and labor, time processing, and time approval. So in this document, in MAPS, it says that all time is to be entered and approved by noon on pay period ending Friday. Now, most agencies have internal policies or practices that align with this, but why is this important? So that the agencies have a chance to do their pre-audits for payroll. So there's much more than just making sure that time is approved, that employees entered 80 hours or their scheduled hours. And so we put together a list of reports. Now, I'm not going to get into what each query or report does. That in itself can be a whole other separate training. But this is a list of pre-audit reports that can be started on Friday afternoon. So DFA runs a payroll process on Friday at noon. And so the agencies by the afternoon can start auditing what's been taken by payroll. They can start looking for holiday issues. Like a lot of times employees don't have the correct schedule in share. So when there's that paid holiday, they're getting it accrued instead of getting it paid. So if you had everything entered and approved by noon on Friday, you could start auditing that information. That does not mean that the employee is not able to make a correction to their timesheet. You can still continue to do that, but you can also by Monday start making sure that employees have correct calculated paychecks so that it lessens the amount of manual warrants that have to be requested because of inaccurate payroll. So there is a difference, just really quick, sorry to go back and forth. So we have our queries, and some of these queries have the same information, but a different way to get it. So like in your first two examples, we have needs approval by state, requires approval by department. These are queries to tell you what timesheets require approval. However, the first query has a start and end date. The second query only has an end date. So I always use this report because I want to know all pending payable time for all the time. I don't care when it was, because if I'm not looking at last pay period and somebody made a change, they're going to be shorted on their upcoming check if it's not approved. So there's some queries under 80, over 80 exceptions, missing pay time. This one's important because sometimes Share does this little quirky thing and the employee may enter time, but it never shows up for approval. So then the agency has to go back, remove it, re-enter it, and then you can approve it. Holiday, no reported time, benefits not taken. This is really important. If you have employees who are on the majority of leave without pay and you're trying to stretch out because your policy allows you to stretch out their leave to cover benefits, and you may need to adjust the amount of hours that the employee's taking to cover all benefits, things like that. Then you have reports, and those reports may pool the same information, just a different way. One super important report that I always tell people they should always run, especially on Monday morning, Monday afternoon, is the payable status report. And we do have some, I do have an example later on of what this report's going to show you. Another way to get exceptions. So I like to go through this navigation to find my exceptions over the query. So again, just the recommended reports to run and queries to run on Monday. And this is our payable status report. So in this example, I ran this report on an agency over 2 pay periods. So that is why you have distributed rows, because that was already processed. And then you have taken by payroll. So that means all the time was entered, approved, it went into estimated status. DFA ran a process, and we now took that time and we calculated a paycheck. It's taken by payroll. So this this agency still has 35 lines that needed approval. They had 33 lines that was estimated. So we hope that this time is going to be taken by payroll. And then they have 20 lines that's rejected by payroll. So if you see rejected by payroll, that's a flag for the agency. You need to go, and this report actually does break it down by rejected by payroll. So you just flip to that page, you can see all the employee IDs of the time that's getting rejected. And so if you need to request DFA to pull that time through because the employee's terminated, that's a great way to figure that out. Or it may be due to other reasons that you need to review and investigate. Outstanding unapproved time and unresolved exceptions. So we constantly remind agencies of unapproved time. The agencies do their best to get that time approved. And then sometimes there's a surprise in the morning. On Tuesday morning, somebody made a timesheet change and it didn't show up on the agency's side. So we will, DFA, myself actually will notify the agency of some outstanding time that requires approval that we will approve on the agency's behalf, because we do want these employees to get paid. So we will notify agencies of worked hours, sick, and annual, but other type of TRCs that require additional approvals like bereavement leave, extra hours, admin leave, we're not going to touch that. The agency can approve that in the next pay period. But we'll send a notification to the agency letting you know, here's the outstanding time. Do you want us to approve this on your behalf? Our goal is to never have any time show up on that. The agencies you guys have done really great in reducing the number of people that show up on that report. And we've actually had 3 or 4 pay periods that we had no time show up. So kudos to the agencies in getting their time approved. Next, we have the exceptions. So same thing, we notify agencies all the time of their exceptions, and come Tuesday morning, I will go in, look at all the unresolved exceptions, and I will remove it. So I'm not cleaning up your timesheets. I am deleting the entry that is making the error, and I notify the agency what I did so that the agency can go back in the next pay period and fix that. And so again, our goal is to have no outstanding unapproved time or unresolved exceptions on payroll Tuesday. And same thing with the exceptions. We had about 3 or 4 pay periods where there were no exceptions. The agencies did a phenomenal job on cleaning it up, and that was a great Tuesday morning for me. So next we have our timesheet correction form. In the event the agency is unable to correct the timesheet themselves due to their access or due to the dates, the agency can complete a timesheet correction form. You would indicate by using a minus sign of what's being removed, a plus sign of what's being added. You will include the combo codes and a comment as to what's happening. And then DFA can enter and approve that on your behalf. Timesheet exceptions. So here's a quick tip on timesheet exceptions related to leave balances. So I know a lot of times when the agencies are doing the payouts, they'll see there may be some confusion as to what the employee's leave balance is, because when you're looking at the timesheet, the balance is telling you as of that first day of the timesheet that you're looking at, that's the balance, versus the end of the pay period or the end of that week may have a different balance because the employee could have accrued time, accrued holiday or something. So the tip is to change your view today and go to that day or the date after to review the leave balances. And that'll save you a lot of time of trying to guess what the employee's leave balance is. Next, we have refunds and deductions. So the information or the documents that are required for a refund or deduction is included on the request form, which is going to be the summary spreadsheet that shows a breakdown per pay period of what was paid, what should have been paid, what is owed, the benefit plans. We do ask the agencies to use the summary spreadsheet that is on our website and not your own, because sometimes agencies created forms may not have all the information that we're looking for. And you also have to include paycheck deductions or screenshots of the paycheck deductions for each pay period that was impacted, and include any other supporting documentation like the email from Marissa or SPO. And so a tip or trick for a refund is to go on the paycheck to see if it was processed, or no, I'm lying. This tip and trick is to figure out what the deduction codes are. I know sometimes that could be confusing and agencies pick the wrong ones. So this is a trick where you can get all that information and also verify the amount. So I have a screenshot of that for you guys in a second. In this example, all the plan types should be the same. Now, a lot of times agency understandingly will put Delta A, thinking that is correct for the domestic partner after tax, and it's not. So the benefit plan is the same for the employee, the domestic partner, and the state. But the way to determine if it's the domestic partner premium, after tax premium, is this box that says taxable DP. And so otherwise, the benefit plan type should always be the same for the employee, for the domestic partner, and for the state. So this was that tip or trick. So if you click on the show all button here, it'll give you the plan type. So here is the example for that domestic partner. So the plan type is Delta P for all three plans: for the state, which is the non-taxable, the after tax, which is the domestic partner. So the taxable DP box is this box here, or this line item here, and the before tax is the employee share. And if the employee is getting a refund, this is where you would see the refund amount that was processed. Next, we have sick leave buyback. So employees who have an excess of 600 hours of unused sick leave are entitled to be paid for unused sick leave at 50% of their hourly rate up to 120 hours once per fiscal year. So the last one we had was in July, and I wrote down what our January date is going to be. See, let me get there. So our January date is going to be January 20th, 2023. So DFA always sends a memo letting agencies know when it's time to do the sick leave buyback. We tell you what query to run and which pay period end date to use. It's extremely important that agencies follow the deadline and notify their employees timely and enter those timely, because there's no exception. If you miss the deadline, you missed the deadline. And one last opportunity that employees can participate in sick leave buyback is when they retire. There's the retirement sick leave buyback, and they can get up to 50% of their hourly rate of pay, up to 400 hours. So that one has a separate TRC. That one has the R for retirement sick leave buyback. And lastly, we'll be updating our form soon. So if you have any thoughts or recommendations of how to make our forms for you as the user better, please let me know. Your input is very important to us, and we want to make sure that what we are delivering meets your needs as well as our needs. Lastly, I think I said lastly on that last screen. Lastly, here is our resources. So the TLV request instruction forms. Oh, one thing I did mention earlier, I did not get into, was the earliest change date. So they do it, put on an excellent presentation or training. And so there's the link to their meeting where they discuss the earliest change date, how to trigger it. And that's about it. So unless we have any questions or
We do have a couple of questions.
Okay.
I don't think they apply specifically to you. So Kristen is asking, will this also apply to municipalities? So Kristen, I'm not real certain what you're referring to as applying to municipalities. So if you want to provide a little additional information, hopefully we can get you an answer on that. And
Hey, Audrey,
yes.
just real fast, because our classes are public facing and some of the classes that we teach do apply to like local public bodies. I think sometimes we get folks attending these classes that may be from a city or a county. So I would assume the answer to that question is probably no. They have their own payroll systems. They would be following their own processes is most likely what I think the answer to that would be.
Excellent. Thank you, Mark. And then Monica, it says it was mentioned that CFOs can review on share side. I'm a CFO at NMRC and have not been approved for access. Again, I'm not certain what access you're referring to there, but if it's just a share access, you would need to submit the share forms to do it to authorize your access.
And that also has to deal with the CFO's role at like a smaller agency. Their role may be bigger, so they may have different access than a CFO at another agency.
Excellent. Okay, so unless there are any other questions, we will move right on along. Okay, so the next step in the payroll process is handled by the payroll administrators. Again, those are Joel Karate and Margarita Fruscas. And what the payroll, go ahead. So when payroll administrators deal with payroll, they have two processes. They have an on-cycle payroll and an off-cycle payroll. So what we're going to talk about right now is the on-cycle payroll, which is what happens during the payroll processing. So during the on-cycle payroll processing, they create the pay sheets, they load the time and labor, and input any payroll changes. They're also responsible for calculating pay and confirming pay. They will update leave accruals and print the paychecks and create the self-service check advices. They upload payroll and the child support files at Wells Fargo and create the payroll certifications and send the wire transfer authorizations to Stowe. They compile the para and ERB files, and then they mail out the third-party payments, submit remittance to para, and submit remittance to retiree health care. So this is all handled during the on-cycle process. The majority of the work that they do outside of processing the payroll is that they process the additional pay request and the para RHC requests for corrections, as well as any TLVs that have overpayments or negative time that needs to be pulled through. So notification to the payroll administrators must be sent every pay period for the following. If you have benefit deductions that are needed to be turned off due to an employee being on unpaid leave without pay, and all benefit deductions, including para and retiree health care, needing to be turned off due to a poll core employee being on workers' comp, since the agencies pay 100% of those benefits. Agencies will be notified when errors are found, including multiple direct deposits, pay line due to negative gross pay, time needing deleted and re-entry or approval, and if there's a tax or a FUTA and direct deposit with international corrections. So additional pays are processed when an employee is owed back pay for a prior pay period. This includes all regular hours and any overtime, comp pay, standby, or callback. Negative APs are also used when an employee has been overpaid due to an hourly salary being entered incorrectly. So when there is a shift and overtime has been worked in the same week and the employee is a FALSA non-exempt, the FALSA rate must be calculated by week to determine the proper amount of overtime owed. Please refer the HR staff to the payroll administrators for assistance in these instances. So the documents needed to submit a request for additional pay is the additional pay form, a worksheet calculating additional pay by pay period, and a para retiree health care worksheet for additional deductions. This is an example of the request for additional pay form. Go ahead. There are 3 different types of forms that would need to be completed for the hours. The one you see here is used if it is just a 80-hour work week, straight time work week. The next form is if the employee has a FALSA rate that needs to be calculated, you would submit this form. And the next form is if they are a poll core employee. There are special rules around poll core employees, and they have a special form that has to be used to calculate that. The para RHC requests are processed when deductions either come out incorrectly or didn't come out at all. So if the employee works shift and the wages must be broken up by the shift and regular wages per pay period and calculated manually. There are no supplemental spreadsheets that are required to be submitted with the request form. Just print the screens from the review paycheck. This is an example of the para corrections only. So if we have an employee, which some of you may have been getting notified lately that either we withheld from an employee that should not have been withheld from, or we did not withhold from an employee that should have been withheld from, then you would need to submit this form in order to correct the para withholdings in the HCM system. This form is if they have para withholding corrections that need to be made and they have shift differential. So are there any questions about on-cycle payroll administrative duties? Great. So now we will follow it up with the third-party processing.
Good afternoon, everybody, and welcome to our Payroll 101 training session. So we had a little bit of an overview. We discussed on who makes the rules. We had a very good presentation from Suzette with time and labor, with the timesheets and exceptions. And then we went on to the on-cycle payroll processes, which the payroll administrators do. Once the payroll administrators finish their processes and will run what's called confirm, they turn over that processes over to our third-party processing team. Our third-party processing team consists of Eleanor Baca, Teresa Gallegos, and myself. Today, we're going to talk about our primary job purpose, garnishments, our year-end processing, our PR journals, and then lastly, reconciling payroll. So our primary job here in the third-party team is that we process the third-party interfaces through the share system in both the HCM and the financial modules after the payroll cycle is complete. We also prepare the child support EFT file and we upload that to the financial system. We run the PR journal processes and resolve any journal and or budget status errors. We also reconcile payroll in a high-level overview, and we also assist the business units with research or documentation as needed for operating transfers, JEs, and account line details. So some fun facts about third-party garnishments. In 2019, we processed a little over 1,000 garnishments. That was a big amount that time. And then of course, pandemic hit and we had a whole stop on everything. Right now, we're seeing an uptick in garnishments as the courts have opened up and creditors are starting to file documents to, again, garnish employees for whatever reason they have their garnishments. At this time, I'm going to turn over the slides to Eleanor Baca. She's our garnishment administrator and has worked in the garnishment administrator job for many, many years. And she's very well seasoned and expert in this field. So I'm going to turn this over to Eleanor. Eleanor, go ahead.
Good afternoon, everyone. I'm Eleanor Baca, and I'm a part of the third-party processing team. Central Payroll handles all garnishments for the entire state of New Mexico. Currently at this time, the student loan garnishments are on pause, but it was announced on August 24th, a final extension on the pause of student loans through December of 2022. Student loan garnishments are to resume beginning January 1st of 2023 per direction of the U.S. Department of Education, which this is not we don't know anything at this point unless the U.S. Department of Education requests that we resume a particular garnishment. All garnishments are held on a biweekly basis or garnished biweekly. First of all, we have rid of garnishments that are 25% of an employee's disposable wages. Rid of garnishments are received by the service agent, by mail, fax, email, etc., from the creditor, employees HR, employees agency legal representative. When writ of garnishment is properly served by the service agent, an answer by garnishee must be filed in court within 20 days of the receipt of employees agency legal representative or New Mexico Attorney General's office. The garnishments should be date stamped, and also with the date received and how the garnishment was received, whether you received it, if it was served to you, certified mail, if it was received by fax, etc. It is imperative that all garnishments and releases are forwarded immediately by email to Central Payroll Garnishment Administrator to allow for entry or release of garnishments in a timely manner. Child support income withholding orders the amount is garnished based on the child support order. An employee may be garnished up to 50% of their disposable wages. Spousal support order, the amount is garnished based on spousal support order that is received. New Mexico taxation and revenue levy are set up at 25% of employees' disposable wages. The Internal Revenue Service levy, the amount garnished is based on the Internal Revenue Service tax table, your filing status, and exemptions claimed. Of course, we have the federal orders and student loans, and those are 15% of an employee's disposable wages. Release of garnishments or termination orders, we are required to terminate the garnishment upon receipt. Employees should contact their HR Human Resources Department with any questions or concerns regarding all garnishments. Human Resources Department will assist the employee or contact garnishment administrator for guidance and relay information to the employee. So I just want to stress that you should go to your HR if you have issues regarding a garnishment. They will then contact Central Payroll, and Central Payroll and HR will work together to resolve whatever issue we have at hand. Also, I do want to mention that it's imperative if or Central Payroll forwards garnishment information to be forwarded to the employee, that is done immediately to give the employee some notice before the garnishment occurs. And I think that's all I have at this point. Thank you.
Thank you, Eleanor. So moving on to third-party year-end stuff. Again, we're going to talk a little bit about the PR journals, the BUD ref and class, and combo codes, and then task profile IDs. So the task profile ID and department budget table update instructions. 1 month before the new fiscal year, DoIT will run an automated combo code update process. DFA Central Payroll will send out an email to the agencies to inform them that the process was run, and the email will have an attachment with the detailed instructions. So what does this do? This process looks at all the active task profile IDs and it updates them. If the agency has a task profile ID that wasn't updated and needs to be updated for the new fiscal year, then the agency is responsible for updating them manually. The following query identifies all the task profile IDs associated with your agency that are both active and inactive for your agency. So I encourage you guys to run this query periodically to make sure that your task profile IDs are updated, that the funding source is pointing to the correct fund, department, reporting category, whatever case it is. Some of these larger agencies are encouraged to run the query on a scheduled basis, meaning that it'll have to be scheduled rather than running straight to Excel, because some of these agencies have a lot of funding sources, a lot of line items, and it could create a backlog on the DoIT systems when it runs the report. So the automated process also updates the combo codes specified in the department budget table. The department budget table allows the system a default combo code to use if it cannot determine where it should charge an employee's payroll. So it's also important to keep the combo codes within the department budget table up to date. This query will identify the combo code assigned to the department budget table. Again, I encourage you guys to run this query periodically to make sure that the combo codes are in sync with the task profile IDs. Every year around June, we run a task profile ID and department budget table update instructions. This is a copy, excuse me, of a memo that we send out when DoIT runs the process. This process looks at all active task profile IDs and it updates them if we meet the following criteria. So when you all get these memos. Make sure that you look at them and run these processes so that we can update them if you need to prior to the July 1 date. Next, the system generation of the PR journals occur every pay period. So the HR account line detail is the source of the PR journals. And the PR journals that don't post to the general ledger with edit batches will require us to manually intervene online and post these journals. So DFA will clear the errors with the help of the agencies or the HR, their payroll staff or CFO. Sometimes budget people will get involved. Some of the journal status errors that we get journal status errors that that need to be cleared because of a budget status error. This occurs when a fund and a department don't belong to an agency. We also get budget status errors. These could include exceeds budget tolerance. These we can override. We have budget date out of bounds. This means that the bud ref for class is incorrect. This happens when there's a prior pay period adjustment to an employee. And then DFA will go ahead and correct to the current bud ref in class. We also get no budget exist errors. And this error occurs when budget has not been set up or if a department budget table wasn't updated. And oftentimes we'll reach out to the agencies to give us the correct funding source so that we can move forward and post those PR journals. Next is reconciling payroll. So once all the PR journals are posted, we can go ahead and reconcile payroll on the high level. So before we begin reconciling payroll for pay period, all the HCM payroll process and the financial payroll batch processes must be complete. And all the PR journals and AP journals are posted to the general ledger. So oftentimes we'll get an agency who wants to reconcile their payroll, but central payroll hasn't finished processing or posting their PR journals. So we have to just say, hold on a second, we're not quite done yet. There are two parts to the reconciliation. So part one reconciles the HR account line detail. Then that's the cash, the liabilities, and the expenditures to the PR journals and their cash liabilities and expenditures. And then we have part two, when we reconcile the PR journal with the cash and the liabilities to the AP journal cash and liabilities. The next slide we have are a couple of queries that we encourage you all to run. If you have a question as to why a PR journal didn't match your HCM account line details, you can run your HCM account line details and filter by fund or department or whatever the error is so that you can find who the employee is that is causing that particular error. Now, keep in mind, the HCM account line details has a lot more details than the PR journal. So the PR journal will not contain a combo code. It will not contain an employee's ID or things of that nature. The PR journal does the fund, the account, reporting category, bud ref class, in some cases project, and things of that nature, but it doesn't go down to the detail as far as an employee. Again, these are queries to run in HCM and in financials. It's just a nice little tip for you all to run to help you reconcile your payroll. We encourage all agencies to reconcile their payroll after payroll runs so that if you come up with any issues or questions or things of maybe a person is not being posting to a correct funding source and you're having to do JEs every time to move a funding source from one account to another, contact Teresa and I so that we can help you not only reconcile payroll, but identify these kinds of issues and how we can help you resolve them. Any questions about the third-party administrator duties?
I would like to interject here. While payroll runs a lot of these queries, especially the ones on the combo codes activation on a fiscal year. Agencies that have grants or some other funding source that requires different timeframes other than the state's fiscal year may want to run those queries when those funding years change in order to ensure that they have the most active combo codes in the system. We definitely encourage you to make sure that all of your data is accurate and correct and posting to the appropriate coding, as opposed to potentially coding to a fiscal year for the state when your funding source is on, for instance, a federal fiscal year. So it's really important that you're running your combo code queries potentially more than once a year when we send out the memo that says to please verify and check these if you're running a different funding fiscal year. Additionally, it is very, very important that payroll is reconciled on a biweekly basis. It really eliminates a lot of the issues that we have on the next payroll cycle when we're able to correct any issues that have been identified and the agencies have reconciled their payroll so that they can identify any issues that they have. When you wait until the end of the fiscal year to start reconciling payroll, it really places a burden on the payroll staff to try and correct any issues you may have identified, because we have the entire state that could potentially be saying we need to get this fixed before our audit. Whereas had it been done on a biweekly basis, it would have been easy to address it when it happened. So are there any questions or anything that anybody would like to bring forward at this time? No? Okay. I think we're gonna go ahead and move forward. We're running way ahead of schedule today, so maybe we'll make this a shorter training than we had originally scheduled, because we haven't even hit break time yet. So we're way ahead of schedule. So everything that we have addressed so far is what is done during the on cycle of payroll. The on cycle of payroll runs from the Wednesday before the pay period ends through the Wednesday after the pay period ends. After the on cycle is completed, we get into what is referred to as the off cycle for payroll. And that runs from the Thursday after the pay period ends to the following Tuesday. So what the payroll administrators do during the off cycle is a lot of the work that cannot be done during on cycle. For those of you that are not aware, once the payroll on cycle starts, which is Wednesday morning, there are many things that payroll cannot do because we cannot interfere with the system and the way it is set up. We have to complete the entire payroll cycle once it starts in order for us to proceed with any of the items that are done during the off cycle. The items that the payroll process, the administrators do during the off cycle is they create the manual warrants and payment vouchers. They can add financial institutions. They deal with any settlement agreements we have or any beneficiary payments for deceased employees. We would also reconcile the payroll accounts. We would deal with any bank returns or reversals, any overpayments that are not withheld from payroll. Again, we create and post the journal entries. We upload the para and ERB files and make any corrections that's necessary for those files. We would also complete the year-end W-2 and the yearly reporting. the monthly state tax reporting, and any quarterly reporting that we have. So the first thing that we do that affects the agencies is the manual warrant request. These are A warrants. We have two different types of warrants, but the manual warrant requests for A warrants are warrants that have to go through the HCM system. They're processed when an employee has been given a paycheck that doesn't have the full 80 hours, and we receive notification that an employee was underpaid for their 80 hours. Warrants are not processed if the employee received payment for their normal 80 hours. So if they were underpaid overtime or some other payment that they did not, it's a shift differential, anything that is in excess of their normal 80 hours of payroll, we will not issue a manual warrant for that. It would have to be done during the next payroll on cycle. If the benefits were already deducted from the pay, so they received a paycheck for 72 hours and they already had the benefits deducted and we're issuing them another 8 hours, we would not deduct those again. We would only deduct the taxes and the para or retiree health care. We would not deduct their health benefits again. I do have the authority to approve TLVs, additional pays, or overtime as a manual warrant under limited circumstances. And those would be very, very limited circumstances. For the most part, I will not approve them as a manual warrant. And it is important to remember that leave accruals for manual warrants will not process until the next payroll runs for that pay period. When we do a manual warrant through HCM as an A warrant, it actually uses the following pay cycle as the date in HCM for that. So any accruals that would occur because of the manual warrant will not post until the next on cycle completes. The deadline for any manual warrant request is 11 a.m., beginning the Thursday before payday through the following Wednesday. So this is an example of the information that is available on the Central Payroll website about the manual warrant process. So if you go to the time approval deadlines for payroll processing, it does give you this information where you can pull down this file and it will assist you in completing the manual warrant request. So some guidelines for the manual warrant request is a review of the request indicate that the most corrections could be avoided by identifying and addressing issues during the approval process. So if you run the queries and the reports that Suzette had pointed out, most of these manual warrant requests could be eliminated. Manual payroll requests should only be submitted if the employee did not get paid for the actual 80 hours. And as a prerequisite to be considered for processing, agencies are required to identify and document the cause of the error, how it could have been avoided, and steps to be taken to prevent future occurrences. Since the ultimate responsibility for implementing internal controls designed to prevent the accounting errors and violations of the law rests with the agency heads, frequent errors and corrections will be brought to the attention of the department head to ensure awareness and to solicit additional proactive attention. So this is an example of a manual warrant request that needs to be submitted in the event of a manual warrant needing to be issued. You will notice that it does require a printout of the timesheet and a completion of why this warrant is necessary and should include the 3 items previously listed. Another large percent of the time for the processors is done with the settlement agreements or court orders or mediations from the state personnel board ruling. So employees who are reinstated or owed back pay due to a settlement agreement, the agency's human resource manager must complete the template memorandum and address it to the Central Payroll Bureau chief. The memorandum must be signed by the agency's chief financial officer, the agency's general counsel, and the agency's cabinet secretary or director or agency head. You have to complete a master spreadsheet and a manual warrant request. And we also require a copy of the signed settlement agreement, all of which should be forwarded as a packet to the DFA Central Payroll Forms box. So this is an example of the memorandum template that you will need to submit with a settlement agreement. It must be on agency letterhead. It must have the exact amount. And if para is to be deducted, it must be indicated. Now, it's very important when you're doing a settlement that you contact para to determine if the submission will come directly from the agency instead of payroll. We often get settlement agreements that say to withhold para, but if the settlement agreement is over an extended period of time, oftentimes para will not accept the amounts withheld from payroll. They require the agency to submit the para contributions for both the employee, the employer contributions, and any interest they have deemed is due because of these contributions not being submitted timely. Which means that when you submit the request to payroll, the dollar value of the request coming to payroll should be minus what the agency is going to submit to para. That it's very, very important anytime you have a settlement that you coordinate with para how they want this settlement to be submitted to them. Because if you submit a settlement to payroll and you tell us to withhold para, we will withhold para. However, there have been circumstances where para has not accepted those payments from payroll because it did not include the interest that is due from the agency, and payroll does not have any mechanism by which to collect or submit interest payments to para. So it's very, very important that when dealing with a settlement agreement, you have reached out to para to determine how those para contributions will be submitted to them. This is an example of the master spreadsheet. So if it is not going to be a lump sum and payroll is going to be withholding para, this is the master spreadsheet that must be submitted with the settlement agreement. You will notice that this requires a breakdown of every biweekly pay period for which the settlement agreement covers. And it then requires you to calculate at the appropriate para rate for that pay period how much the para deductions are going to be. So if you have a settlement agreement that covers a 6-month period of time, and that 6-month period of time covers multiple para rates, each pay period must be calculated at the appropriate para rate for that pay period. The next type of manual check that payroll does is a B warrant. Now, B warrants are done if they are reissuing a check that has already gone through HCM. So if we get an A warrant returned by the bank, or basically it's a direct deposit return, where they were already paid through HCM, they were paid appropriately, but they did not receive the payment, then we would do a B warrant to reissue that check. B warrants are used for direct deposit reversals if there is a lost payroll check, if it's a stale dated payroll check, or for a deceased employee's beneficiary. So bank returns and reversals occur when the bank account for an employee is either closed, it's incorrect, or invalid. And the payroll administrator will verify with Wells Fargo if an employee's direct deposit has been returned. If we get a bank notification of a return, we will automatically issue a B warrant. The agencies are not required to do a request for a manual warrant because we already know the money has been returned and we will issue that. Reversals occur when payroll is able to reverse an employee's direct deposit after submitting it to Wells Fargo. If a reversal comes back as insufficient, a journal entry is set up for the agency to collect the funds. So for instance, if an agency notifies us that they input the wrong direct deposit information, payroll can request for a reversal to occur with Wells Fargo. We will not reissue that payment until we receive the money back from Wells Fargo. If we do not receive all of the funds back from Wells Fargo, for instance, it was changed due to fraud and we do not receive all of the money back, then we are still liable to pay that employee, but the agency will have to carry an accounts receivable for those funds that went to an inappropriate account, and that will need to be addressed by the agency. So as I stated, an A warrant occurs if an employee was overpaid and it needs to be corrected in HCM. So the agency would submit the request to payroll to pull back the funds. CPB requests the reversal from Wells Fargo. Wells Fargo would return the funds. And again, if the funds are not returned, the agency will need to collect the overpayment from the employee. CPB will not proceed and the agency should follow the overpayment guidelines. CPB will void and reissue the A warrant in HCM and then notify the agency to pick it up. For a B warrant, direct deposit information was input incorrectly or fraudulently. The agency submits the request to payroll to pull the funds back. The agency would need to submit a request for a manual warrant and a 10-day waiver. CPB will request reversal from Wells Fargo. Wells Fargo will return the funds, and if the funds are not recoverable, the agency will need to cover the loss. CPB prepares the voucher and requests for FIN. The B warrant is issued through the accounts payable system, and the agency is notified to pick up the warrant. The B warrant through FIN requires it to go through the normal batching process of any AP account. So there is always a 2-day waiting period, 48 hours, in order for us to issue a B warrant. And this is an example of the 10-day waiver. And again, this can be located on the Central Payroll website. So if you have a lost or still dated payroll warrant, so you would need to submit this affidavit, which is an affidavit of lost or stolen warrant, and it must be notarized. It must also accompany a request for a manual warrant. And if it's a still dated warrant, it requires the submission of the original warrant and the request for a manual warrant. All requests must be verified at Wells Fargo. If the warrant is cleared, the employee will need to submit a police report for identity theft, and the agency will need to file a report for fraud. The warrant will not be issued until these reports are submitted. We are finding instances where checks are being deposited through mobile deposits. And then after a certain period of time, they're being returned to us asking for us to reissue them, where we find that those checks have already been paid through Wells Fargo. And so in order for us to reissue, if a check has already been paid through Wells Fargo, it would require for the employee to file a police report for identity theft and the agency to report for fraud before we could reissue that warrant. The next large number of checks that we do are for deceased employees. So when an employee passes away while they are active, a notice of death must be submitted to CPB by the agency's HR immediately. As soon as HR is notified of the death, they must notify CPB so that we can take the appropriate steps in order to ensure that we're not issuing that check to an employee who is no longer alive. So once the notice of death is received, the payroll administrators enter the following information and share. They go into job data and enter death. The agency is responsible for maintaining time reporter. They will inactivate the direct deposit. They will change the taxes so no withholding comes out, and they will change the name on the check and the payroll sort key to deceased. Once we have received the completed beneficiary paperwork, a check will be reissued to the deceased employee's beneficiary and the personal representative or the estate. So this is an example of the notification of death form. So an agency notifies CPB of the death. We will make the changes in the current payroll. The warrant is issued to DFA for their current payroll and is deposited into a DFA account. The agency then submits the TLV paperwork. Once the agency submits the beneficiary document and the TLV is processed, and CPB receives notification of deposits for these two payments, we can then issue the payment to the beneficiary. This process can take between 30 and 45 days. So there are various beneficiary documents that need to be submitted depending upon what type of beneficiary it is. So if the beneficiary is a spouse or another surviving adult, we must receive a substitute W-9 with the beneficiary information, affidavit of deceased employee's spouse for final payment, the original certificate of death, if possible, a last will and testament, and trust documents if applicable. If the beneficiary is a minor, the agency should confirm the minor's guardian with a birth certificate or court order. The guardian would then submit the affidavit signing I, Mary Smith, am the parent or legal guardian of Joe Smith. They would also submit a W-9. The parent would complete the W-9, but would use the minor's name and social security number. The parent would sign it with their name and then would write as the parent of Joe Smith. We would again need the original certificate of death, a last will and testament, and trust documents or UTMA information. The check should be made out to the minor. Now, if there is a UTMA account, this would allow the minor to be the owner of the account, but names a custodian to manage and administer the account. If the UTMA account is open, then DFA could transfer the funds directly into this account, as opposed to having to issue it to the minor. So some of the other payroll administrator duties that occur during the off cycle is if we have to cancel a warrant without reissuing it. For some reason, we issued payment and the agency determined that the check should have never been issued, then we can just go ahead and cancel that. We also deal with overpayments. If an individual was overpaid and we're having to collect the funds back, we deal with the overpayments. We can add financial institutions into HCM, authorize direct deposit access, authorize payroll statement printing. We also deal with reissuing of W-2s and again, parafile submissions and corrections. So this is an example of a payroll cancellation when an employee should not have been paid or the agency catches it before the check is dispersed, then we can just go ahead and cancel that warrant. Overpayments. So if an agency, or I'm sorry, if an employee is overpaid for wages that aren't earned, the funds can be recouped in the following manner. So if they are a current employee and the overpayment was made one pay period prior, the adjustment can come out of the next paycheck. If the overpayment was made in previous pay periods, written acknowledgement from the employee is required, as well as a memo to central payroll requesting the overpayment be deducted. Now, most of your HR's onboarding has this written acknowledgement written into it, where the employees acknowledge in the event of an overpayment that payroll has the ability to recoup those funds. I would definitely check my HR onboarding to ensure that this is part of the acknowledgement process. If it is not in your HR onboarding, then anytime we go to recoup from previous pay periods, we must have written authorization from the employee that they acknowledge they were overpaid and we are recouping those funds. If the employee has been terminated, then if the TLV has not been paid out and there's enough leave time to cover the overpayment, with the employee's consent, we can process it through the TLV. If the TLV has been paid out and there's no way to collect the overpayment, a journal entry is set up for the agency to collect the funds. If you have an employee that is trying to set up direct deposit and the financial institution is not in HCM, please send a memo to payroll requesting them to add the financial institution. The only thing that is required is the financial institution name, the routing number, the address, and the phone number. Please do not send us the employee's voided check, their direct deposit request form, or any type of attached documents. All we need is an email with the financial information, institution's information in it. The CPB will not add or change an employee's direct deposit information in HCM. If the employee requests a change and the agency is locked out for payroll, so for instance, on Tuesday morning, an employee comes in and says that their bank account has been compromised and you do not have access, we will not change their direct deposit. You can send an email requesting to have the current direct deposit turned off, and then notify the employee that they will receive a paper check until the change can be input by the agency. All direct deposit input or changes must have the appropriate documentation before inputting into HCM. So some of the things, what is required for direct deposit input. It does require a direct deposit authorization form signed and dated. The first page of the most recent bank statement for the account showing the employee's name on the account and the account number with all of the financial information. redacted. So we don't want their balance. We don't want to know what their transactions were. All of that should be redacted. Alternately, for a checking account, we can use a pre-printed voided check that lists the employee name as the account owner. Please be very wary. Electronic checks are not pre-printed and should not be accepted unless the bank statement is submitted with the check. We are finding a lot of fraud that is occurring through these internet banking institutions, where they create an account and then are able to generate an electronic check that they use to submit for direct deposit changes. Do not accept these electronic checks, as they are not what we deem as pre-printed. A pre-printed check is the actual physical check that is pre-printed from the bank and submitted. So do not accept electronic checks as pre-printed unless they come with the statement from the bank account. So agencies are able to determine who has access to input direct deposit information. In order to receive this access, they must complete the direct deposit confidentiality agreement. This can be located on the Central Payroll website, and employees need to input the name of the agency, their name, and their ID numbers, and the agency business unit. You would then submit the direct deposit confidentiality agreement signed by the employee and the HR manager, and CPB will review the request and submit or return for corrections or deny due to the number of employees with current access. Because of the NACHA changes that have been instituted by the banking industry, DFA is limiting the number of people throughout any agency that has direct deposit access. The way the system is being set up is we are masking all banking information, and only a limited number of people should have access to that information. If you have direct deposit input authority, you are able to see the unmasked versions of the banking information. Because of that, DFA is limiting the number of people with this access. Some agencies have far too many people with direct deposit input in access, and we will be using attrition to bring that number down. So please do not be surprised if your request for direct deposit access is denied. We are basing it off of the number of FTE within each agency and the number of people that currently have that access. So just because you submit the request does not mean that it will be approved. So one of the main concerns and things that people really need to be aware of is fraud prevention. Now, the pandemic has increased the amount of fraud across the board for state agencies, and everyone is responsible for ensuring only correct information is input by people who have the authority to do so. Identity theft has become a major cause of fraud, and a lot of this is being done through hijacking payroll, specifically through changes in direct deposit. So this is a list of precautions that DFA is recommending in order to ensure that fraud is brought to a minimum. As I have stated, DFA will limit the number of personnel that have access to set up or change direct deposit in HCM. These new limits will go into effect with the pump upgrade, and the pump upgrade should go in on, I believe, October 14th is the date for the pump upgrade to be implemented into HCM. So whenever you are inputting information into HCM for direct deposit, please have the information verified by a second set of eyes. We are receiving notifications from agencies that they were working on one employee and then switched to direct deposit and input another employee's information in the employee that they had been working on, because they're not going through the second set of eyes step where the information is being verified by somebody else before they are saving that information. Another thing that you really need to be concerned about is ensuring that the person submitting the documentation is the employee. So have the paperwork submitted in person. If it's submitted electronically, verify the change by phone. Locate the contact number in HCM. Do not use the contact information submitted with the forms. People are having their email hijacked and then having documentation which looks 100% legit from their appropriate email address being submitted to HR to change their direct deposit information. So it's very important, if you receive an electronic request to change direct deposit information, that you go into HCM and locate the contact information for that employee and reach out to them through that information to ensure that they did change their direct deposit. Please make sure that the proper documentation is attached, as stated, the bank statement or a voided check, not an electronic printout or counter checks without a matching bank statement. Ensure the employee's name is on the account. If you receive a request to change a direct deposit and the employee's name is not on the account, we should not be making that change. And then match the account and routing numbers to the voided check on the bank statement. Again, please be very suspicious of prepaid accounts such as Green Dot. I can't remember who the other one is that we've been seeing quite recently, but most fraud is a result of these easy to create accounts, which are emptied as soon as the funds are transferred. So as soon they get notification, the minute those funds hit that account, and they are pulling the funds out. So if we have erroneously set up these direct deposits due to attempted fraud or some other activity, it is highly unlikely that the agency will get those funds back, and they will be responsible for making the employee whole. So it is very, very important that if you are setting up or changing direct deposit information on an employee, that you have taken the due diligence that's needed to ensure that this is the appropriate process to be taking. So at the end of the year, DFA will submit the W-2s for all employees. So DFA prints all of the W-2s for the prior year, calendar year, unless the employees have requested to have it electronically provided. Share does allow for W-2s to be electronically provided to individuals, and we encourage that. It is extremely expensive to print out a W-2 and to mail that W-2. So if we can encourage all employees to receive their W-2s electronically, that is definitely the best approach for receiving those W-2s. Now, with that being said, if an employee has terminated, there is no way for them to receive an electronic W-2. So the W-2 is only imprinted if the employee did not get it electronically. DFA will sort the W-2s by agency and then notify the agency when they are available for pickup. Agencies are responsible for mailing the W-2 to the employee, and agencies do not need to save a copy of these W-2s. We live in an era where all of this information is saved in Share, and we can reprint them at any time. So there is no need for agencies to be making copies of W-2s and saving them. When an agency mails out W-2s, they must write their full business unit on the top right of the envelope in case that envelope comes back as undeliverable. Without that information, DFA does not know what agency to return this to. So it is important that if you're mailing out W-2s, that you write your business unit on the top right of the envelope before you mail them out. During the year, a lot of people will request a reissue. So a request for a reissue for any year must be submitted by the agency. DFA will not reissue a W-2 on a request from an employee. It must come through the agency. There is a request form that should be completed, and it is on the DFA website, and it should be submitted to the DFA forms box for that request. DFA will then reissue the W-2 and submit it directly to the employee. The agency will not receive the W-2. We will submit it directly to the employee based upon the information on the form that is submitted. The form does have two options. You can be submitted electronically or through the mail, but only one delivery method may be selected. That we will not submit both electronically and then mail it. So only one form should be selected. And again, the agency will not receive a copy. So this is a example of a duplicate W-2 request. And currently it can be completed for any year from 2013 through the present. Agencies must complete the form and submit to the DFA forms box. Again, we will not accept it directly from the employee. These requests must be typed. A lot of agencies are handwriting them and making it very difficult for us to determine exactly what it is that is written on there. So again, only one delivery method should be selected, and we will send them directly to the employee, and the agency will not receive a copy. So para files are created each pay period, and we create both a regular file and an adjustment file, which are uploaded to para. These files must be free of errors before para will accept the file. Rio, which is para's system, does not match job data. So some of the issues that we get is the information that is submitted to para as far as a new hire, transfer, termination, Social Security, or wage adjustments. The information that is in HCM is not matching the information that has been submitted to para. And whenever there is a discrepancy, payroll is required to identify the reason for the discrepancy and get it corrected. Oftentimes, there are incorrect effective dates that have been entered in HCM, or the position doesn't match the para records. So any of these issues that occur, para will be reaching out to the agency to resubmit the paperwork, because we we, being DFA, has to go by what is in HCM. And if the HCM information does not match the RIO information, what PARA has in their system, PARA will be reaching out to the agency to correct this information. Otherwise, these files will continue to error out. Another form of issues that are created with the PARA files are payroll calculation issues, where the wrong deduction amount has been entered because the employee is in a wrong salary plan. Additional pay did not withhold PARA when it should have, or the wages that are reported are more or less than the prior pay period. So if the hours are not reported in a correct pay period, if the employee is on a leave of absence, if the TRC code is not reporting correctly, we are seeing a large number of retirees that are being withheld from that should not be withheld from, or incorrect percentages are used when we are calculating additional pay. All of these will cause the file to error in RIO. And then we have to go in and manually correct those files. If there is an issue with the payroll calculation, the agency would then be required to do a PARA correction form and submit it to payroll in order to bring HCM in line with what is being reported in RIO. So beginning July 1, PARA will begin charging penalties for failure to submit files timely. DFA will then journal entry any penalties charged for failure to upload files timely to the agencies whose employee caused the file to fail. Agencies must submit all documentation to PARA timely. Payroll strongly recommends attending the PARA training on forms and submissions required by the agencies. No, please go back. So here are some tips for HCM setup in order to prevent these PARA and HCM discrepancies. So one, do not copy and paste into HCM for your HR setup. There are many times where we have to go in and do nothing more than correct the name, the address, any of the general information that gets pulled through because of the way that it was set up in HCM. So if you're inputting information into HCM, do not use periods after initials, such as junior, senior, or even just if you're using a first initial for a middle name, because we have to go in and take all of that punctuation out in order for it to process. Do not use brackets or ampersands. We have people who have parentheses mailing, parentheses current. We have some addresses that are, for instance, T and M Road, and we have to go in and physically change those to remove the brackets and change the ampersand to actually read and in order to get it to process through PARA. By the same token, we have quotation marks that are being used that we have to take out. Colons, semicolons, commas. If an address has a half in the address, we have to actually type out half. Do not use Spanish punctuation. And CPB will begin to notify agencies if we have to make these punctuations corrections in RIO, because that's time that we have to go in and spend correcting files every single pay period to remove this punctuation when it should just be corrected in HCM, and we wouldn't have to continually make these corrections. It is ultimately the agency's responsibility to ensure that this data can flow into para appropriately. So we will begin to notify you if there are employees that we are having to make these punctuation corrections in order to get the file to upload into para. Next, please. So, any questions or any discussion that would like to be had? We are way ahead. So, I'm going to open the floor. Feel free to ask any questions. Okay, I guess not. Well, I want to thank you all for attending. We will be working on some additional, more in-depth training to be for the future. So I hope to see you in the future in some of these trainings. If you have any recommendations or something that you would like to have additional trainings on, please let us know so that we can provide further training and insight into the payroll processes and how we can work in a more collaborative effort in order to ensure that we're making everybody's lives easier and are able to accurately and timely meet our obligations to both the employees of the state and all of our reporting agencies. I want to thank everybody for attending. I want to thank Suzette, Margaret, and Eleanor. And again, if you have any questions, please reach out. Our staff is always willing to help.